Okay, y'all, we're gonna go live here. Here we go. All right, welcome back, everybody. This is Matt and Chill with the Open Economy Initiative. And thanks for joining us here today. We are joined by Adam and Ron, the co-founders of Interaxis down there in Texas. Thank you all for being with us. We really appreciate it. And we're excited to dive into this this discussion here about financial planning and RIAs and all of the stuff that entails. We got a lot to cover, so I'll make the intro here kind of short and sweet. But yeah, Chill and I, we're the founders of the Open Economy Initiative. We're on a mission to drive crypto commerce through education. To that end, we've got a couple courses up on Udemy about how to buy Bitcoin and how to use DeFi. If you want to check those out, head over to the website, theop.com. If you have any questions, reach out to us. We're pretty available, and we're excited to be doing these streams with you and putting this content out. So yeah, with that, Adam, Ron, again, thank you guys for joining us. And I think I'm curious to know a little bit about how you all got started in this niche that you're in, because you guys kind of seem to be the only ones really doing it. Maybe there's a few other people, but you guys are kind of blazing a trail here. How'd you get to that point, I guess, or how'd you get here?
Okay, thanks, Matt. Well, first of all, we appreciate being here. We definitely appreciate your use of the word y'all, because we in Texas really understand that well. But how we got here is Ron and I started off in I started in financial services in early 2009 after several years in the tech world. Ron started about a year later. We met in 2012 or so, doing some advanced courses, advanced kind of estate and business planning courses in Pennsylvania. And eventually we partnered. We became we created our own LLC because we work for the same broker dealer. We eventually left and went independent. So we had our own RIA here in Texas for a while. And it was in about 2017 that that Ron actually turned me on to crypto. Of course, I had read about it and seen stories and seen this meteoric rise. And at the time, meteoric rise meant Bitcoin was up to like $3,000. And I knew that, the Winklevoss twins started a hedge fund, which I thought was so ridiculous that people were investing that much money in a Bitcoin hedge fund. And I kind of thought of it the same way most financial advisors did, that it was, not really a scam, but it was just some asset that wasn't really going to make it. It was, kind of a joke and not backed by anything. And those of us in the financial advisory community, that's just kind of what we all thought. And so I eventually bought some cryptocurrency. I actually, to show how naive I was, Ron told me I could go to this website called Coinbase and buy some. And my first question, I called Ron and I said, "Did you know there's 3 of these things?" I don't understand. I had never heard of these other 2, this Ethereum thing and Litecoin. I don't even know what they were. But then to further show how naive I was, I bought ETH only because Bitcoin had already run up to like $5,000, and I wasn't going to spend $5,000. I didn't realize you could buy portions of one. Nor, in addition, I thought, well, if Bitcoin's done this, ETH is definitely going to do the same thing shortly thereafter. So I might as well get the one that's $200 and watch it go up to 5,000. So bought some. It immediately ran up. Shortly thereafter, bought some Litecoin. It immediately ran up, and I thought, I'm done. Like I'll just invest all my money in this, and I'm done with investing, and I'll be retired in like 2 years. This is incredibly easy. Then Ron was nice enough to introduce me to Bittrex and Binance, which allowed me to trade the thousands of different cryptocurrencies. So Ron and I played around with those. And I asked one day, why, I don't even know why they have all these. And Ron did a pretty good job of explaining it to me, but we wanted to learn more. So that's when we started down the proverbial rabbit hole, late 2017, when ICOs were hot. when, everything was just running up and everyone was buying whatever they could in the crypto realm. We were learning, taking, doing online courses, whatever we could do. At the time, it was watching YouTube videos, it was reading white papers, believe it or not. It was anything we could do to learn about this technology. And we got really, really excited about the actual blockchain technology and what it could do. And of course, we had a little bit different angle because we, come from the financial services world already. So we knew where there were so many inefficiencies. We knew what people do with their money. We knew what investing looked like. And so it was really, it was just super exciting to us, right? I mean, just like it is to a lot of people that hear about it, but we saw so many different use cases. Of course, we talked about that with everybody we knew, and they got tired of hearing us talk about it. Because this was, at a time where people didn't really care about the technology. All they cared about is how can I make 100 times my money in like a week and a half. So, that being said, we didn't do a whole lot with it. We thought maybe we can have like a consulting gig around it because no one else knew about blockchain as much as we did at the time. And what we knew was we'd done a lot of online research. That was about it. But no one really cared to learn about it. The most learning was, you take me to lunch and I'll tell you about it, but that's about it. So in 2019, we actually started being invited to speak at crypto conferences because there weren't a whole lot of financial advisors that were talking about it at all. And we, I guess, led a little or lent a little validity to it. And that was at the time when DeFi was just kind of being built up. There were the first DeFi protocols when, Maker and Compound and DYDX, and those were out. And that was pretty exciting. And then late 2019 is when Ron's idea, Ron's the impetus behind all this. He just pushes me to do all these things, these crazy crypto things. Ron said we should create a YouTube channel where we just get on the whiteboard and explain it. So it's very low tech way to explain a very high tech subject. And it's the same way we explain any other financial concept to people. It's a complex financial subject, and we're going to explain it to you. We're going to break it down as much as we can and hopefully explain it to you, taking some of the financial ideas, products, services, everything else that you already know and putting it in that kind of context. And so we had the YouTube channel, which had some success. More than anything, people enjoyed the way we explain things, and we made sure that it's always education, explaining to you why things are important, how they work, why they're important to you. Not you need to buy this, or here's how you trade, or here's how you go 100x. It's here's why this might be important. Here's who's using it. Here's a different way to look at this particular subject. And that's what we really focused on.
Yeah, that's really important. I really appreciate that approach. That's what we've tried to do as well, is really put a premium on the education. And then once you understand it, you can make a more informed decision. But sorry, I mean to interrupt.
No. You're exactly right. It's about the education. It's not pushing any one particular thing, because I don't want it to seem like we ever have a certain angle on it. It's just, we want to educate, and you make your decisions based on the understanding and knowledge. Then those are, they might not be good decisions, but at least they're decisions based on education and knowledge, and not based on hype and media and all that. So early 2020, we decided we should have a course for financial advisors to teach them how to teach about crypto, DeFi, blockchain. And we thought, who better to teach them than us, right? Other financial advisors. So we actually dropped our RIA so that we could not have to deal with the compliance and regulatory issues anymore, and focus our time on creating courses for financial advisors around crypto and blockchain. Of course, our timing was not good because we had COVID hit right when we launched our course. So right, the day we launched was the day that New York shut down, and the Dow dropped 2,000 points, and Bitcoin lost 50%. The NBA shut down. All of that happened the exact day that we launched our course. So the last thing anybody in the world wanted to talk about was how, as a financial advisor, I can learn more about crypto and help my clients. So really what that did was that gave us, the time to be able to retool, figure out what we really wanted to do, add, of course, more YouTube videos, figure out what we wanted Interaxis to be. And this is at the same time that, now you start to get the hedge fund folks like Paul Tudor Jones into Bitcoin. The government starts printing more money, which adds to the allure, like adds to the investment thesis even more than it was. You have, I think some of the impetus of DeFi that we've seen, which is people stuck in their homes, chatting online and figuring out how to do cool stuff with DeFi protocols because they didn't have a whole lot else to do. And that definitely spurred it. The fact that now we could, we were all got used to communicating with each other just like this, right? With over Zoom. Well, why shouldn't our money do the same thing? So a lot of those conversations were going on, and look, the fact that none of us could go anywhere saved a whole lot of time. Right? We could have 8 meetings in a day without leaving my room. So I think a lot more got done, and DeFi, crypto, everything got propelled a little bit. Especially on the backs of all the money printing, which brought in all the hedge fund people, which said this is okay to invest in. And it started with Bitcoin, and then it moved on to a bunch of the other cryptocurrencies. And now we're seeing this, kind of explosive growth. So I apologize for the really long-winded story. I want to tell you how we got here.
Yeah, but it's true. It was the perfect storm for everything that happened.
It really was. And so now we have relaunched our courses to be more of a cohort-based course, because we realize that not only do we have to explain cryptocurrency to financial advisors, explain how Bitcoin works, wallets, custody, because all that is so different from anything else they've dealt with. The conversations are different, but we had to help them understand how to make it part of their practice. So that involves compliance and regulation, E&O insurance, how, what services to offer, who you can use as custodians, how to make it part of your AUM, how to bill for it. And it involves a whole lot of the conversations that you'll have to have with clients, right? What does it look like when a client comes in the door and already has crypto in at Coinbase or in a wallet, or someone gave it to them, or I talked to a guy the other day who said his son gave him a Bitcoin and thinks it's like a physical coin that he has, and I'm having to go. There's not really such a thing as an actual Bitcoin,
right?
And he goes, no, my son gave it to me. He bought it in Canada. I said, okay, if you show it to me, maybe I'll know,
right?
But, until I see that and can help you with it, then I don't know really how to help, but. From an advisor perspective, what are those conversations going to look like? What do they look like on a day like today? What, as we're talking here and Bitcoin is falling below, 46,000 or so, what does it look like? It was at 60, almost at 60 a few days ago. It's now at, 48. How do you have that conversation with the client? We have to talk about those things with advisors so that they can talk about it with their clients. And then we haven't even gotten into as much of talking about where DeFi is going to take us and what that's going to look like as an advisor in the next 3 or 5 years, when more assets are tokenized and more of them are utilized for DeFi type applications, and you can own assets and with multiple different custodians at the same time. That's going to be just a completely different world for financial advisors, and we kind of want to be at the forefront of that. So that's where we are today. We're about to start our 3rd cohort. So we do it as a cohort-based class. It's 6 weeks. Every week is about 2 hours of on-demand content, which is very technical. Here's what Bitcoin is. Here's how wallets work, custody, private keys, because we have to start there. Then some of the technicals get into what some of the investment options are, what some of the service offerings that you can have as an advisor that we've thought of. You might think of different ones, but what some of those are that we've thought of. How to look at segmenting clients a little bit. We get into DeFi, we get into security tokens, of course, ETH, smart contracts a little bit. And every week we have 2 hours of a live session where everyone in the course can just, we ask questions, we go through conversations they've had with clients. We talk about whatever's going on in the news that week, which lately has been a whole lot. And the goal is to get them prepared to start talking to clients about it. We can't possibly give them every bit of information. But the goal is by the end of it, they're armed with enough that as more information comes out, as more technology, more regulation, more compliance, more custody, more opportunities, more solutions, they're at least armed with this base technical knowledge that they can read about it and understand it. They can understand what others are telling them. They can understand what we're telling them if we come out with more content, that they don't have to go back to what is Bitcoin or what is a blockchain or what is custody.
Gotcha. So it's more of like a foundational knowledge versus like you're now a Bitcoin expert, and
Exactly.
You're contributing to the core the code base.
Right. It's foundational from the perspective of how do you as an advisor help a client, not why, we're not maximalists or anything like that. It's not like you have to have this in your portfolio, because keep in mind that advisors, most financial advisors, even if they allocate 2% or 5% to crypto for their clients, they still have 95% other stuff that they have to deal with, right? And they're still helping their clients, utilizing their fiduciary responsibility, which says I have to do what's best for my client. And so you understand this enough to know how it fits in a portfolio, but that doesn't mean that you're telling everybody you have to get into Bitcoin right now.
Right. And that's something you'd mentioned before we went live too, was kind of how if you're being truly acting with your client's best interest in mind, it's not really, you can't really be like a maximalist in kind of any sense. You really need to have kind of a more open perspective to things. And can you just kind of give me a little more context with that? Because that's something that I also agree with, and I kind of want the people watching this to hear it as well.
Okay, sure. And the interesting part of this, Matt, is we started this course with the idea that we were going to teach current financial advisors, people who are already registered, already licensed, probably already have their RIA set up or work for a broker-dealer or something. We're going to teach them how to at least incorporate crypto conversations into their practice. And that doesn't mean you go out of your way to try to sell your clients on getting into crypto. What it means is your clients are probably interested already. They might already have some. You probably have prospects that are interested. And you need to understand how to have those conversations so you can either win those prospects as clients or keep those clients that you already have. In that respect, your role as the advisor is not to push anything on them, really. It's to figure out how does this fit in their portfolio. If they come to you and say, look, I'm really interested in having some crypto, what should I do? You can have that conversation. Here's how we're going to allocate to it. Here's how we're going to hold it, keep it safe. I don't want to custody for you, so buy it here on Coinbase or Gemini or Kraken or wherever. And here I'm going to show you how to use a hard wallet and move it over there. And now you're going to keep it safe. Or the flip side, which we've seen recently, which is really interesting, that we the three of us have talked about, is the number of people that are coming from the crypto side saying, I want to be a financial advisor now, right? And that's actually a completely different way to look at it, right? Which is you've been learning crypto, you've known about it, right? And that means that you've probably been talking about it. And this is my guess for most of them, is the ones that we've talked to, is your friends are asking you about it. Can you help me with this? You're the crypto person. What should I buy? And of course, you've gotten tons of Doge questions lately, which you probably roll your eyes about. As a matter of fact, I had someone, my brother texted me yesterday. He said, I have a crypto question. And I texted Ron right away. I said, 98% chance that he mentions Doge, 98%. And I was right. Of course it was. Well, among other things. So I'll give him credit. He has ETH as well, that he bought at like 1,400. So he's good. But I mean, that's what everyone's talking about. But as an advisor, you need to know about that. Now, if you're coming from the crypto side, wanting to get into the regulated side, right? Because your clients are asking you about it, you have to understand what that means. You have to understand that if you've come from the crypto side and you're a hardcore Bitcoin maximalist, that's the only thing you should ever invest in, then you're going to have a really tough time being what's called a fiduciary. And a fiduciary means you have to put your client's best interest first. And it might not be a good idea for you to be pushing only Bitcoin all the time, hold it all the time, don't ever sell it, don't ever let it go, those kinds of things on clients without even giving any credence to other cryptocurrencies or allocating to any others or balancing or anything like that, or diversification within the crypto world. That is not a very healthy place to be. Likewise, if you're totally against Bitcoin and you're a complete ETH maximalist, that's a hard place to be as well if you're trying to be a regulated financial advisor. Because a regulated part says that you have to be a fiduciary, you have to do what's in your client's best interest. So it'll be no different than if you're a financial advisor and you just, 100% all I push is tech stocks. That's all I do, is I just get people into tech stocks and tech ETFs, and there's nothing but technology, or there's nothing but oil and gas LLPs, right? You wouldn't see many financial advisors or RIAs doing that. Just like you shouldn't see them pushing one particular cryptocurrency.
That's
now, I will let you all ask, because you all are coming, are thinking about that side. So with that, you can go ahead and ask, what it takes or what your thoughts are.
Yeah, no, I mean, I completely agree. I think it's important to, just be willing to keep an open mind about it. And I mean, obviously as a fiduciary, I mean, you're required to do that, but I mean, just in general, as a investing practice, that seems to have worked fairly well for me personally. But I think I'm interested in knowing a little bit more about, as someone coming from the crypto side of things and wanting to make sure I'm crossing my T's and dotting my I's with the regulatory people. What kind of does that, what would that entail, or where, what would that process look like? That's what I'm interested in knowing a bit more about. And Chill, I don't know if you've got anything you want to add.
Likewise, we understand, the neutrality and objectiveness that's required, obviously, to assess different projects, to make sure, that we're not making emotional decisions based on
right,
whichever community we support. But yeah, I'm also interested to learn a little bit more about, the things that you mentioned. And actually, there's a question in the chat as well from Janine. She says, what crypto portfolio software you use? So more like the practical, most challenging thing for those who do get into crypto is how to keep track of their trades for current balance and tax reasons. More like the pragmatic, practical side that you have to deal with as a financial advisor when you cross that bridge, and and you're dealing with crypto. And you made a brief mention it earlier to that point.
Right. So, as getting into being a financial advisor in the crypto realm, look, you can do it and be crypto centric, right? Because as we've said, you two, and probably plenty of others watching this that are interested on the crypto side, probably have friends asking, and you're going, okay, how can I make money at this and still stay legal, right? Still stay out of jail or not get fined, right? Because that's kind of important as well. So you can, more than likely, you can offer advice and help out with things like how to set up a wallet, how to actually set up a Coinbase or Gemini Kraken account. You can answer things like that without having to be a financial advisor. You can just offer services. Look, I'm going to help you with your wallets, your setup, your custody, all those things. Where you have to draw the line is if someone says, okay, I have $10,000 to invest, which token should I put it in? Which cryptocurrency should I put it in? How should I allocate this? Now you're being a financial advisor. Now you're helping them with their finances. You're making advice on their financial decisions. You're not just setting up technology for them. So that's kind of where you have to draw the line. Now, the good part is, well, okay, so as as you two know, as many people don't, in order to do that, you can set up as a financial advisor like that offers something like that for a fee. And a fee can be, you charge a percentage of their assets as a fee, or a fee can be an hourly or a project fee or a monthly fee or something like that. You can give financial advice for a fee, and the only exam you have to take is called the Series 65. Okay, you can go to the FINRA website, and or you can just Google search Series 65, and you'll come up with the information about it. You can go take that. You don't have to be sponsored by a broker dealer or an RIA or anything else, and you can go, and then you're, a sense, once you pass it, of course you have to pass it. You can't just take it. Passing is important as well. They care that you actually knew the information. You didn't just guess C for everything. So you have to pass the Series 65, and then you're able to offer financial information for a fee. Then you have to have what's called a registered investment advisor. And a registered investment advisor is an entity. It's not an actual person. That's important to know. An RIA is an entity. Now, you can be the only advisor there. You can be the only person working there, but the RIA is the entity. And the RIA is what gives you the ability. You register with either the state or the SEC. The state, usually, if you're smaller and you're working in one state or two states, you register with the state. And there are services that will help you with that. There are attorneys that will help you with that. And what you're doing there is you're telling the state or the SEC, here are the services I'm going to offer. Here's what I'm going to charge. Here's what I'm going to do for my clients for those charges. And they're going to approve or not approve, right? In the crypto realm, it's going to be a little bit harder because states and SEC are not used to this, and you're really going to have to work to get it through. But so there's an RIA, this entity, and this entity is kind of in charge of compliance, right? It's in charge of making sure that clients get these forms called the ADV, and the ADV is what tells the client, here's what I am allowed to offer to you. And what that does is it says you can't offer certain services for one price to one client and for a totally different price to a different client. And you can't just make up fees and make up services on the spot. So if you never filed with the state to be able to offer hourly services, you can't just decide to do it one day for a particular client. You have to basically ask permission from the state to amend your ADV and offer hourly services or project-based services or something. And then the ADV is public knowledge. Anyone in the world can go online and search for your ADV and learn about what you offer. Okay, and you're required to give those to your clients every year. Anytime there's an update to it, you're required to give them to your clients. There's all sorts of regulations like that. The other thing that's going to happen is you better keep pretty good records about your meetings with clients, what you're doing for them. If you are trading for them, you better keep track of what you've traded, why, how, what you charge them. If you are managing assets that are under your custody or under the custody, obviously, of a custodian, but you're able to trade them and you're charging what's called an AUM fee, so a fee based on the assets that you're managing, you better keep really good records, because about every 2 years, you're going to get audited by the state or the SEC. I mean, someone's going to come sit in your office and ask for all your records and make sure they match with the agreements you have with your clients, to make sure they match with what the SEC or the state is seeing. They're going to look at your books. They're going to look at everything. And the goal here is to make sure that you are doing the right thing for your clients. You're doing what you said you were going to do. You're not misleading anyone. You're not doing anything you're not allowed to do. You're not taking custody of their funds. All these kinds of things that whatever regulatory body, the state or the SEC, they're making sure that you're doing what you said you were going to do, and everything you're doing fits into compliance. It fits in the regulatory framework. Okay, so again, I say all that to let you all know that anyone coming from the crypto world, which is very heavily anti-regulation, right? This is a huge change. This is literally someone looking over your shoulder all the time to try to understand what you're doing. There are a lot of rules. So if you're going to go into that world, you really need to think about that. The fact that there are a lot of rules here, and the rules essentially are there to protect the investors. They're there because once the federal regulatory body has blessed you with that, once you've passed that exam and they've said you're a financial advisor, they're basically telling everyone in the country, we feel like this person is capable of offering financial advice. They're an expert in their field. Therefore, when they speak, you are allowed to listen. That means when you speak to your client like that, if you do something that is fraudulent or that is against the rules, and the country or the state blessed you with that, then they're going to come after you if you don't do the right thing by the investor. If the investor says, I thought I was getting Bitcoin and I ended up with Bitcoin Cash. What's going on here? Or, how come, Matt's wallet got hacked. How come I don't have any money anymore? And then the state goes, well, Matt, you weren't supposed to custody this for them. You're not allowed to do that. Okay.
Right.
Like that's part of the rules. You can't custody it for them. You can't even have their private key.
It seems, well, no, I mean, yeah, and I want to address your comment there about like kind of the anti-regulatory sentiment of the crypto world, because it's definitely spot on. I mean, I probably share a bit of that sentiment, but I also realize that, for the space to mature and for the mass adoption that everybody kind of keeps talking about to really take off, at least in the United States, we need a little bit more accountability for this, because I can remember back in 2017, the meetups for CoinMD and, all these different projects that were just, you spend 5 minutes listening to them and it's a blatant scam. I mean, almost immediately. And they're, getting people to buy these packages and it's multi-level marketing, all this stuff. And it's like, man, they're really, I wish there was some sort of kind of trusted authority where I could go to and say, hey, these people are saying this, saying that. Is this something good? Should I get into it? Can you kind of advise me on that? And there's nothing really existed around that time. So I agree with what you're saying. I wish I didn't, but I do. And I think that's kind of important for the people listening to also realize that, if you want, as the space matures, there needs to be some more accountability so that people can more safely participate in it. That makes sense to me. But,
and what else is really interesting about seeing the people come from your side into kind of in our world, right? Into the, I say our world when I'm talking about crypto or traditional, because, Ron and I are some of the few that get to, Ron and I get to be in both worlds all the time. So we are multi-dimensional, multi-dimensional, I guess. But one of the interesting parts is so many financial advisors are beholden to either their AUM fee, right? So they get a percentage of whatever assets their clients have, whatever assets they manage, right? AUM is assets under management. So they've built their business model around AUM. So they've been trying for years to just accumulate assets. I want more assets to manage because I get to charge 1% of whatever I manage. So if I have $100 million, I get to charge basically $1 million a year. And that's what I'm trying to do. Well, crypto does not fit very neatly into that, because you have to have some way to figure out where the custody is. Who's the qualified custodian that can do that? How am I going to charge for it? I don't want to have to sell crypto to be able to pay my 1% fee. Equity stocks, the stock market fits neatly into that because it is Monday through Friday, 9 to 4. You know when it's trading. You know when the first of the month is. This is when I bill you based on however much you have at this time on this date. But you can't do that in the crypto world because it's moving all the time, right? What I had in my account yesterday is very, very different from what I have in my account today. So when am I billing? At what point am I selling some of your crypto to pay my fee? That is not very easy to do in the crypto world. So the traditional financial advisors, one of the reasons they haven't moved into crypto as much, beyond the fact that there's not that much understanding, is it's very hard to charge for it, right? And if your business is built around AUM, which most of them are, it's really hard to account for that and figure out, where you're going to custody and how you're going to fit this into your AUM. And you can, I can tell them, look, you can do a project fee or an hourly fee, but that doesn't fit their business model. They're not accustomed to that. Coming from the other direction, you're very accustomed to subscriptions. You're very accustomed to project fees, right? So you can actually build a business model around projects and around subscriptions and say, look, I'll charge you $150 a month and I'll help you out with all your crypto questions. I'll make sure that when you buy at the right times, I'll make sure that we're keeping track of your custody. I'm not going to custody anything for you. You keep it on hard wallets, or you keep it in vaults, or you keep some of it on an exchange. There are so many things that clients are going to need help with, that those that have been versed in crypto and blockchain and DeFi for a while are going to be better suited to help clients with. And it is so necessary because, as I said, one, we're just now working with financial advisors. And look, so many of them are doing great. There are so many that are eager to learn and want to help clients. But it's a very, very new world and very different technology and very different from what they're used to. And what they're used to accounts for over 95% of what they do with their clients. So how much time and energy can you allocate to what is essentially 5% of your business?
Sure.
And the answer is, look, if you're being a fiduciary, you honestly shouldn't allocate that much to it, right? If you're going to help your clients. So coming from the crypto side, there are so many other services that you can offer clients and probably partner with other advisors and go, look, just if anyone has crypto, pass them off to me. I'll take care of them. I'll do a great job for them. Here's how my fees work. And they would probably be more than happy to do that because they know that their clients aren't going to lose money. Well, I don't say they know they are. You're going to help them to where they aren't going to lose as much money. They're not going to be as susceptible to hacks and losing private keys and all those things because you're going to be able to explain to them how important it is. And you're going to be able to help them with, how much you put in a wallet versus how much you put in, a hard wallet versus an exchange versus a debit card related, function. Those are the kind of things that they really need help with. Now, from a advisor perspective, if you become an advisor, you have to keep in mind, again, that your clients you can't be talking them into putting 20% of their net worth into crypto. You can't be going against, too much what their other financial advisors say, because that might be the person that's handling most of their wealth and they have a plan, right? They have a financial plan and they can only allocate X amount to, what we consider, alternatives or riskier investments. So you have to keep that in mind. You can't be at odds necessarily with the other advisors. You kind of have to be working together. But there are so many ways that people who understand and are well-versed in digital assets can really help clients. And part of it is the education, a big part, right? When they hear about some cryptocurrency, they hear about something like Doge that's moving or SafeMove or something like that, they can ask you questions and figure out, and you can, honestly answer them. And you don't roll your eyes and you don't necessarily go, oh, that's crap. You shouldn't do that. It's like, no, I'm just going to explain to you what it is. And you figure out if you want to invest in it.
Right.
And you might go, look, I'm an advisor. I don't recommend it. But if you really want to, put $100 into it, whatever, go ahead and do it. At least know here's what it is, and there's a really good chance you're going to lose it. So those are some of the roles that are going to be so important for someone who is already versed in this, and the fact that you can build your business model differently from other advisors, meaning you don't have to figure out how to shoehorn this into an old business model. You can create a new business model around giving people advice, crypto, digital assets, DeFi. Eventually it'll be DeFi, right? It'll be, how do I utilize this as my bank? An interesting question, I got from someone is they, ended up with a whole bunch of Bitcoin, right? Because they bought in, actually after it crashed in 2020, they bought a bunch of it and it, rode it all the way up to where Bitcoin is over $50,000. And they're going, okay, now what do I do with it? And we had to, kind of walk through, well, how much do you want to keep? How much do we want to keep in cold storage? Is it worth it to have some sort of interest account, which means that it's usually custodial. You're going to have to hand over custody to someone else. And as a kind of a crypto native, it's a little bit easier to have those conversations because you understand the tech side of it. You understand why vaults or hard wallets are safer for their money than a custodial solution. But if you're coming at it from the financial advisor, like being a crypto financial advisor, you might go, but you can put a certain amount of your money in something like a crypto.com or a Fold or Genesis Block or something where you might eventually have access to it from a debit card. And now maybe it serves as a little bit of your emergency fund. And if you ever want to go buy coffee with it, you can go do that now. So you have $100,000 worth of crypto, $100,000 worth of Bitcoin. We're going to keep 75% of it in cold storage, and we're going to keep 20% of it on an exchange in case you want to trade it or something, and we're going to keep 10% of it in your 5% of it on some sort of account where you have access to it via a debit card if you wanted to. And those are the kinds of the conversations that we're going to see that are very different than the conversations most financial advisors have with clients about their traditional assets.
Sure, sure. So I mean, it sounds like you're seeing some opportunity here for people that are focused on the crypto side of things, kind of augmenting the more traditional side of things, because they're not really set up, model wise to play nice with crypto, and it's also a pretty high. I mean, the learning curve is incredibly steep. I probably don't need to beat that horse too much more, but I mean, let's see, what was I going to say here? Yeah, the opportunity that you're seeing for someone to become a kind of crypto focused financial advisor, there's yeah, it's growing. I mean, how much growth do you see it? Where do you see it going in the next year or two?
Look, there's so much opportunity. Of course, crypto is so hot right now, and financial advisors are slowly getting there. And a lot of them are waiting for the custodian, the custodial relationships. Of course, there's fintech kind of companies that are springing up to be able to help those advisors. So there's OnRamp is one of them, Blockchain is one of them. A company called Amy that's in Canada that's hoping to make it to the US. They're one of them that's building the bridges between traditional financial advisors for traditional financial services and the crypto world to help out the financial advisors. That being said, there are so many investors, clients that still have some sort of need, and they might not be looking for a solution that is AUM based. They might not be looking for their client or for their advisor to help them manage their crypto assets like that. They need help with, okay, I have a significant amount of money, or I have some amount of money in Coinbase right now. What do I do? Or they just might want the education of, I bought this on a whim and here it went up in value and now it's, crashing today. What do I do? I don't understand what's happening. And maybe they want to get out of this cycle of panicking, panic selling and then buying back. Like maybe that's what they want to get out of and go, okay, how do I actually invest in this? And you might be able to help them with what I actually invest in. That didn't really answer your question. The question was how big or where do you see this going? And the answer, like I can give you the lawyerly answer, even though I'm not a lawyer, that says I have no idea and it depends. But sure. In reality, I see that there is a big need, a big market for it. We've talked to some people that want to put together like a crypto RIA. So you have this overarching entity potentially over a whole bunch of folks like you all that want to get your licenses and go, okay, we need one entity that is going to handle the compliance part and handle the regulation and disseminate to us the worksheets we need to use with our clients and the questions we need to ask and how we have the conversations. That's a big part of it. So I see that getting potentially bigger. Maybe you all are the ones to do it, right? Because you have the network. Maybe you're the ones to help start that. And, of course, we're happy to put you in touch with those people. But that we see that opportunity growing because you now have so many, especially the younger investors, as you know, more millennials and younger investors are the ones that have gotten into crypto. They're also the ones that got into Robinhood, right? They're the ones who have gotten used to doing things on their own and not wanting to go to the traditional financial advisor. So they're used to paying subscriptions for things. They're used to those kinds of relationships, and they're used to doing things virtually like this. So you don't have to go into a conference room or an office and go through the traditional financial advisor things, which means you can potentially have a relatively lean business. So there's definitely going to be, I don't want to say definitely about anything. There will more than likely be quite a bit of growth in the realm of financial advisors that focus on crypto, focus on digital assets in multiple realms. One can be, individual clients. One can probably be for, family offices, high net worth. How do we invest our money? And be able to do the research, and explain to them, here's how you should allocate your family money. Do research like, here's how you hedge against inflation and other assets that maybe you have in your portfolio. There's definitely going to be a need there. And then more than likely what will happen is the two will come together, right? The traditional financial companies will merge with the crypto RIAs. And what you'll get is, you all start this RIA and eventually maybe you get folded into one, or maybe you buy a traditional one or something because you're doing so well at this. You buy them and the business model shifts. right? And so you can handle all parts of a client's portfolio all under one shop. And maybe you change the model. Maybe it's all a subscription. I don't know. Like we're just throwing out a whole bunch of ideas here, but this is the chance to be able to change up the business model a bit.
Yeah, we're on the cusp.
Sorry.
No, chill. No, you go.
No, I'm saying that Adam and Ron are definitely pioneering this space. I mean, I only know of, I think, one other company, and really no one else is doing it. And this is music to my ears, because what I feel is, as you see here, I mean, at least in Denver, you know, some of their staff as well made me spell blockchain.
Mm-hmm.
So that tells me that, you know,
Right.
the education is not quite there. And I personally find it frustrating that they have these self-imposed sky-high rules and clearance requirements where they do not mix with, you know, technologists, innovators. They don't get their hands dirty with DeFi. And so the regulation is coming down, regulate first, understand later. And I would really like to see that switch, and for them to understand what they are regulating and kind of make the rules a little bit more flexible and fluid. I'm not saying to just throw the rules out, because we can see the need for it, but I hope that changes. And what you're painting, the picture now with the crypto-only RIA, that really fits into my vision, because I must say I don't really enjoy the traditional financial system and the rules and the rigidity around those rules, where there's just no room for, you know, bringing these to clients, bringing these,
Right.
and there's huge opportunities. And I understand the 5% requirement as well, but there's still huge opportunities in crypto.
There are big opportunities, and look, we have to say this, that the regulators are there for a reason, right? Because in the absence of regulation, the absence of what they do, a whole bunch of people there would be a few people scamming a whole bunch of other people all the time. It happens with regulation. Imagine what would happen if there were even less regulation. And there are very few regulators in relation to the number of advisors, the number of clients. So they have to take the approach of, we're going to almost over-regulate to make sure that we protect people until we learn otherwise, until we figure out something otherwise. And that's just the approach they have to take, because there aren't enough of them to all go through the education and all take their time learning about DeFi. Because, I mean, you know, it's probably taken you years to get to the level of education that you're at. Imagine having to get to that level of education while at the same time regulating everything else that's happening in finance right now. That's a tall order, right? And that's quite a bit of understanding. And you know, that level of understanding, you should probably run a hedge fund, right, or something like that. So it's a really, I mean, I really feel for the regulators that have all these people going, please just let me do this, let me do this. And they have people on Twitter chirping at them about what they should allow and how can you not allow, you know, how can you have these accredited investor rules and everything. But look, they're there for a reason, because at the same time, if imagine we let every advisor help clients invest in DeFi and all these protocols, and then you'd have a whole bunch of rug pulls. And everyone would be going crying to the regulators going, how did you let this happen? How did you let these thieves steal my money? And the regulators would be going, you asked for it. You asked for us to take off the regulation, and we did. And then you lost your money, and now you're going to come crying to us again, right? So you can't really have it both ways. So they err very much on the side of protecting investors from themselves and protecting them from predatory financial advisors, or even advisors that just don't know enough and are trying to capitalize on whatever the hot thing is at the time to appease their clients without having that level of education. So there is going to be a need for people who understand it and who are willing to deal with the regulatory burden that is going to be there. That means that when you get audited, they are going to look at things and ask you questions that you're going to roll your eyes and you're going to go, you have no idea what you just asked me. And I don't even have the capability to answer you, because you're not going to understand it anyway. But I mean, they have a tough job and they have a whole lot to understand. And so it's not necessarily a bad thing. We need the regulation in order to have the adoption, because if we had too much adoption without the regulation and everyone lost their money because there are rug pulls, because there are hacks, because there are exploits, then either one, the government would just shut it all down and say, we're tired of this, we're tired of people losing their money, or the whole system would crash on itself because no one would trust it at all. So there are reasons for it. It's not a bad thing. And being a crypto person, a native crypto person willing to help people and say, look, not only do I understand this and I'm willing to help you, but the SEC and the state have said that it's okay to do it. And if I do something wrong, they get to come after me, right? That's how much I feel, that's how much I'm behind the information that I'm telling you.
Right. Yeah. And there's the accountability side of it. And
exactly.
And I mean,
It goes beyond like, I tweeted about this. I care enough that if I tweet the wrong thing, I can get fined.
Right. Yep. And Chill, to your point too, I think, it's like there's like anything, there's a balance in it, right? Too much regulation stifles the innovation. That's going to slow the growth and hurt the space, but not enough regulation and no consequences for acting like a jerk and ripping people off and hurting people. That's also going to slow the growth of the space and slow the innovation. So it's like, and you do a great job of this. I know how involved you are with the legislation here and the different regulatory stuff in Colorado, promoting that and making the regulators and the people passing, looking at this stuff on the law side of it, making sure that they're educated, and I think that's really kind of the best thing that you can do if that's your primary concern is get involved, let them know, hey, we're good people out here. We want to help people. Here's what you ought to know. Here's what maybe you don't know. And, don't kill the innovation here because it's really going to pay some dividends down the road. And kind of to that end, Adam, I'm sure there's crypto focused RIAs that you've helped or that people are looking to start. Do you see the states becoming a little more favorable to like approving those, like the administrators, somebody who's like, hey, I'm starting this entity. We're going to be primarily focused on crypto and, trying to get the approval of that. You kind of mentioned it. It's a little tough right now. Do you see states becoming a little friendlier to it? Or are they still kind of in that, like, what is this? What are you doing?
Look, I think if it's your only focus, it's probably going to be it's probably a little harder. They're probably opening up a little bit more to it, especially if you all are in Colorado. You're in a more crypto-friendly state, I feel, than a lot of the states out there, and in a more kind of progressive financial state anyway. Right, then states like New York, New Jersey are really difficult just from an overall financial perspective anyway. So adding the crypto realm is even harder there. So like I haven't talked to every state. I don't know. I feel like you work with someone who can really help you through that. And there are even attorneys that are, their job is to help people set up RIAs. And within that, there are attorneys who know the crypto world and help people set up RIAs. So that obviously helps because they're the ones who will be able to say, we know exactly what you need to do, or as much as we can help you figure out exactly what you need to say to the states in order to actually get your approval, what you can and can't do, what you can and can't offer. And they can even help you set up your things like your agreements that you have with clients. And that's going to be really important. My guess is that it'll get a little bit easier and a little bit easier as we have more of this fintech boom kind of around melding crypto and traditional finance. The states will make it a little easier because they'll have a better grasp of things like custody. There'll be more money behind it, of course. There'll be more big money financial advisors, big money RIAs asking for this, and therefore the states will already be open to it and already be ready for it. It won't be, some one-person shop trying to set up and they're the only one in the state, there'll be several of them with these kinds of applications. So my guess is that it'll get a little bit easier, but that's what you have some of these services or attorneys to help you do anyway, so that you don't have to go at it alone.
Gotcha. Chill, do you have anything? I have one last question here. We're coming up on an hour.
Yeah, so let's talk about how you guys can, support both, blockchain native, blockchain nerds, as well as financial advisors on this journey.
Sure. So as we alluded to earlier, we have our course that's specifically for financial advisors. Now we do have some people that have gone through this course, and it's the cohort course. And our next cohort is starting, by the way, next week. So May 17th, the first live session will be May 21st. It has been geared more towards, in terms of the on-demand content, especially geared more towards those that are not crypto native. So you can learn about blockchain and custody and such, where we feel like it might be beneficial for someone who is coming from the crypto side, whereas you might already know the crypto stuff relatively well. It might be a little bit eye-opening. One, we have a little bit different perspective, right? So we're going to explain it when we do our courses in terms of not only how it works, but how it works for you, the financial advisor, how your clients might see it. But then it might be a little eye-opening to actually be able to hear what other advisors are hearing from their clients and be able to have, how those conversations look, what it feels like or what it sounds like to talk to a client as an advisor, because that's a very different conversation than just, someone, your buddy who texted you and asked you about Dogecoin, right? It's a very different conversation when they're paying you for it and when you're regulated by it. So I think that's a little bit eye-opening, and you get to come learn about the compliance and regulation, though, because that's the same whether you're coming from the traditional side or the crypto side. The compliance and regulation is the exact same. The services that you can offer are the same. Either one of you can offer the same services, and you get to see what services some of the traditional financial advisors are offering, and determine, do you want to offer those same services? Do you want to offer something different? Do you want to figure out who you can partner with? So if you're a traditional financial advisor, you're going to learn about the crypto side, custody, wallets, DeFi, where we see this going, security tokens. We're going to have conversations about what happens in the, when something like yesterday happens with the SEC and with Elon Musk and what happened with Bitcoin. We're going to talk about those and how to have the conversation with your clients, most importantly. If you're coming from the crypto side, you're going to see those same things and you're going to hear the same conversations, but you're just going to have a different view on it, right? You're going to come from more of the crypto side. How do I explain this to my clients that already asked me about crypto that I'm already helping with? And you're going to go, okay, how do I explain this as a financial advisor now? How do I, explain not, buy the dip or something, but here was our plan. We had a plan around this, and the plan said, we're going to hold on to this for a few years, or we're going to sell when Bitcoin hits X, or we're going to get out when it hits Y or something like that's our plan. And you have to learn kind of some of that traditional terminology, because that's what clients are kind of used to. So there's probably an avenue in it for both. Again, coming at it from the crypto side, the first couple of weeks, you're going to go, man, I kind of already knew all this, right? Like I know how wallets work and private keys, and probably I know it better than Adam and Ron do. But you're going to hear about how it works, how it looks from a client perspective, and how a traditional financial advisor looks at it. And then in the live sessions, you're going to get to have those conversations. On top of that, we have resources like worksheets and checklists and everything else to go through with the client, talk about estate planning. And we talk about how it, other terminology to use with clients, things like trusts and estate plans and everything. So that's where it might be beneficial. I don't know. We tell people.
You guys are bridging the gap between the crypto side of it and the traditional side of it. So there's something there for either, whatever perspective you're coming from. Yeah, I mean, that makes sense to me, because I know, the crypto people definitely need to hear, how do I, what's a fiduciary? How do I act as a fiduciary? Like, that's something, how do you have those conversations, and the compliance side of it? that all seems like very valuable information.
Yep. Well, I hope it's valuable. I think it's really important for any advisor to know how to have those conversations with clients.
Yeah.
And so that's the realm we want to go, is how do you talk to clients about that? How do you understand what it is to do what is in your client's best interest? And that's the most important thing here. And you know, we eventually want to get to the point where we all, like those of us that are on this call right now, kind of understand or have a feeling that we know where this is going. And where we think it's going is, this is building an entire new financial system, right, from the ground up. And you're going to have to be versed in it eventually, because it's going to be different than the current equity system or bond system or, you know, income system we have. There are going to be so many new investment opportunities, and being versed in liquidity pools and liquidity mining and you know, on-chain lending and stuff like that is going to be really important, because it's going to open up new streams for your clients. So that's where, you know, coming from the crypto side, you understand it better. But again, you're going to have to figure out how does this fit in the regulated world? How can I do this and not get fined and not get sued and not lose my client's money, and do what's best for my client, and still understand that they also have other investments, right? They have traditional equities and traditional bonds and you know, traditional real estate and things like that.
Right. Yeah. So yeah, you can be the complete package. The complete package. I like that. I like that. So this code, the code that you gave us, this is for the cohort that's starting on the 17th.
That's correct. That's for the one starting on the 17th. And look, if you can't, you know, if anyone can't make that one, the next one will probably be, you know, beginning to mid-July. And so we can, you know, offer it for that one as well. But this next one, yeah, will start on May. When I say May 17th, it starts that week. So the first live session we'll have will be May 21st, which is next Friday. As we're recording this, it's next Friday, but it'll be May 21st is the next one. So you all have the, I believe, the discount code.
Yeah. Down below there, if you're watching this after the stream, or it's in the description for the video. And if they wanted to sign up, they just go to interaccess.io.
If they want to sign up, they can go to certifieddigital.org.
Okay. All right, we'll put that down. We'll put that in there too. We'll put all that in there.
Right. Certifieddigital.org. If they want to learn more, I know it's a little confusing, but that's for the certification portion of it. If they want to learn more about us, we're at interaccess.io. That's our website, interaccess.io. And they can email if they have questions, info@interaccess.io. On Twitter, we're interaccess8, at interaccess8. And that's how they can get a hold of us if they need to ask us questions about the course, and, you know, ask us if it makes sense.
Sure. Yeah. When I was doing a little prep for this, you guys are very accessible and available. So if you have any questions, just reach out. They make themselves, Ron and Adam definitely make themselves available. So
yeah, we don't, who needs sleep right now, right? Crypto never sleeps.
It really doesn't. It really doesn't. Well, I think that's probably gonna do it for today. I don't know any no last minute questions here in the chat. But yeah, check that out, guys. And if you're interested in getting into the financial advising role, and you have a good kind of background knowledge in crypto, you know, learn how to do it right. Make sure you're not going to run afoul of the regulations and the regulatory stuff, and check out what Adam and Ron are doing. It looks like a great program. Chill and I are pretty excited to meet you all and just learn about this stuff. It's been really informative for both of us, and I'm sure it will be for our audience as well.
All right. Well, thank you all so much for having us and allowing us to talk about this a little bit. It's really exciting to have people coming from the crypto side and want to actually help and advise. And believe me, it is much, much needed. There are so many people that are getting invested in cryptocurrency and need quite a bit of help. Even if they got in on their own, there are days like several of them in this last week where we've had some crashes where they definitely need some help.
Right. Yeah. There's a lot of opportunity. I totally agree with you. There's quite a bit of opportunity, and you know, do it the right way. Put in the work. make sure you're crossing your T's and dotting your I's, and you know, it'll be good. Help us grow the space and make this, you know, make this crypto thing the next take over the world, right? That's what everybody
Right.
wants.
The next internet, right? The internet of finance.
Absolutely. Well, cool. All right, we're gonna end it. I did want to ask you about that crypto ROA. So if you don't mind just hanging out on the call, but I'm gonna end the stream here. Thank you everybody for joining us.
Thanks, everybody.
Thank you.
Yeah.
Thank you, Ron.
All right. See ya. Okay, I think there's a little delay there.